Okay, let's talk about gold and silver, because they have been on an absolute tear lately. I mean, prices are just shooting up, and it's got everyone talking. It's super exciting, right? But it also brings up this huge question for anyone who's invested or even just thinking about it. After a run this big, is now the time to sell and lock in those profits, or is this rally just getting started? All right, let's get into it. So first up, you just gotta appreciate the scale of what's been happening. I mean, just look at this chart. The word people are using is parabolic, which, it just means prices have gone almost straight up. Gold's 5-year return, a staggering 184%. Now, silver's 5-year number, 32%, might look a little more modest, but don't let that fool you. Its recent moves have been even more dramatic. Yeah, these aren't just little bumps in the road. This is a major, major market event. So the big question is, what's pouring fuel on this fire, right? This isn't just some random market noise. There are some really powerful economic forces at play here. And if we're going to figure out what might happen next, we've got to understand them. Okay, and it's so important to get this. Gold and silver are rallying for pretty different reasons. They're not the same story. For gold, it's the classic tale, right? Global uncertainty kicks in and everyone runs to it as a safe haven asset. Plus, you've got central banks, especially out in the East, just buying it up in record amounts as a hedge. Silver, though, silver's a different beast. It's a workhorse. Its price is getting a huge push from industrial demand, especially with the whole green energy transition. We're talking solar panels, electric vehicles, all that stuff. And at the same time, the supply is super tight. So you've got two totally different paths leading to one big rally. Now, as exciting as this whole surge is, anyone who's been following precious metals for a while knows the deal. They move in cycles. Trying to predict the short term is, well, it's pretty much impossible. But history? History can give us a fantastic roadmap for what to expect after a massive run-up just like the one we're seeing. Let's just take the last major cycle, for example. Think back to 2008 through 2011. The world was in the middle of the global financial crisis, central banks were printing money like crazy, and what happened? A massive bull run in both metals. But what came next? A multi-year drawdown. That's just a fancy way of saying a sustained drop from the peak. Prices were under pressure for the next 4 years. This pattern, a super sharp rise followed by a long, slow correction, it's a classic feature of this market. And this really highlights a crucial difference between gold and silver. During that last big bull run, silver actually delivered more upside than gold. It was the more explosive investment of the two. But, and this is a big but, here's the flip side. When that correction came, its fall was much, much deeper. You got to think of silver as the high-risk, high-reward player in this pair. This really just sums it all up perfectly. History doesn't just suggest this can happen. It shows us that it's the norm. A powerful rally literally creates the conditions for a significant correction. It's not really a matter of if, it's usually just a matter of when and for how long. Okay, so is there a tool we can actually use to kind of, gauge the temperature of the market right now? Absolutely. There is a key indicator that professional traders watch very closely. It's called the gold to silver ratio. I know, it sounds kind of complex, but it's actually incredibly simple. The ratio just tells you how many ounces of silver it takes to buy 1 single ounce of gold. That's it. Think of it like a historical price tag comparing the two metals. And right now, that number is sitting at about 48.5. So it takes 48.5 ounces of silver to get 1 ounce of gold. But what does that number actually tell us? Okay, here's the simple way to read it. When that ratio is super high, let's say above 90, it means gold is really expensive compared to silver. But when the ratio drops below 50, which is where we are now, that's a major warning sign. It suggests that silver has rallied so hard, so fast, that it's considered overheated. And this is why analysts are watching so closely right now. The ratio has crossed a historical line in the sand that often comes right before some serious profit-taking in silver. All right, so let's put all the pieces together. We've got a parabolic rally, we understand the drivers behind it, we know from history that a correction is pretty standard, and now we have a key indicator that's flashing a big warning sign. So what does this all mean for you, for an investor, today? Look, this isn't about trying to predict the exact top. That's a fool's game. This is all about risk management. Given everything we've just laid out, the most important thing is simply to be prepared. So what should that preparation actually look like? Okay, a few things to keep in mind. First, after a move this steep, any selling on the way down can be just as sharp and fast. Second, you should expect some extreme volatility. The price swings could get pretty wild. For traders out there, this might mean setting your stop losses a lot wider, giving the price more breathing room before you automatically sell, just so you don't get shaken out by all the turbulence. And finally, and this is so important, remember that lesson from 2011. A drawdown can last for years. Getting back to a major peak can be a very, very long waiting game. So we're left with this really fascinating dilemma, aren't we? On one hand, you've got this incredibly powerful momentum. On the other, you have history and key indicators all pointing to some significant risks ahead. So the final question, the one every investor has to ask themselves, is this. Is this a momentum ride you feel ready to capture, or is it a clear warning of a coming storm?